that we had forecasted that we did not achieve due to the geopolitical challenges that we encountered, where our aeronautical revenue did not increase as expected. Our cost to income rather, has also slightly increased, and again, this speaks to our costs slightly increasing more than our income. And this is deliberate, ladies and gentlemen. We are building capacity. In the future years, these numbers look actually much better because then our cost will be maintained at increasing at an inflation-related rate. We had our depreciation. We are a capital-intensive entity. We have significant depreciation. Our investment income has also improved in the current year from 368 million to 500 million, and this really speaks to us optimizing returns as we collect our cash, placing it with our various banks, and making sure that we maximize and optimize the returns that we then receive from our banks. Finance costs have decreased in the current year, and again, this speaks to us managing our debt quite effectively. You will see that our gearing has actually improved quite significantly in the current year. All in all, ladies and gentlemen, our profit after tax, before tax, improved by 22%, while our profit after tax improved by 138%. We're quite pleased with the split between the aeronautical and non-aeronautical because it speaks to diversification. We were hit during COVID. When people don't fly, our aeronautical revenue gets hit. But our strategy it is to actually diversify and really unlock some of the opportunities in the non-aeronautical, which in principle it's non-travel related revenue. This next slide just gives us just an overview of how our aeronautical revenue has performed in the current year. Quite pleased to share that in total, whilst we did not achieve the forecasted traffic, but we still showed signs of growth in our aeronautical from the 3.6 billion to 4.1 billion in the current year, which is a whopping 13% increase. And in the main, ladies and gentlemen, the three international airports, which are our flagship airports, are the main contributors to this revenue. But we are seeing signs of growth also in the smaller airports, which is quite pleasing for us, because then it speaks to even further diversification of our business. The next slide then speaks to non-aeronautical revenue, which is mainly driven by the retail, growing by 10%. These are all the stores that you see at our airports. Property rentals, parking, car hire, hotel operations, all showing signs of growth. We're quite pleased with these numbers. This is one area that we really intend to bolster and grow quite significantly in the coming years as we implement our non-aeronautical strategies. And these colleagues and ladies and gentlemen, the conference center is part of those interventions where we are growing our non-aeronautical revenue. Our expenditure for the year increased by 19% from 4.1 billion to 4.9 billion, split between OPEX and employee cost. On the graph on the right-hand side gives us a split of this expenditure. In the main, we have repairs and maintenance of about 546. And this is really fast-tracking our refurbishment, our repairs and maintenance, which we had put on hold during the COVID years. And our focus really it is to get our airports to the standards that it ought to be. And the 546 is just the beginning of our spend towards repairs and maintenance. So really what this says, ladies and gentlemen, is as we enter our airports in the next coming years, we will not have issues with ablutions, we will not have issues with cleanliness in our airports, because this is what this picture actually addresses. Security, 511. IT, which speaks to, again, innovate, grow, and sustain. And this is a testament of us actually implementing then that strategy that speaks to innovation. In the main, in that strategy, it is IT. Cleaning, rates and taxes, and these are all property-related expenditure, which also grew in the current year. The next picture just gives us a view of our financial position, and quite happy and pleased to share with you that we continue to have and run a solvent entity. We continue to run a liquid entity. Our return on equity in the current year, 5.6%, which more than doubled to what we generated in the previous year of 2.5%. Our gearing for the bankers that are here has improved quite significantly in the current year from a 17% to an 8% in the current year. And this was quite deliberate because we want to really build a give ourselves a headroom as we go to the market and raise more debt to then fund the 21 billion. And it really puts us in a favorable position with our banks. Return on capital employed increased from a 3.6% in the previous year to a 5.7% in the current. And again, this picture, ladies and gentlemen, talks to creating value for our stakeholders. Cash flow activities in the current year, we started with a 2.8 billion of cash. We generated from our operations at 3.3 billion, received interest of 276 million. We invested about 1.3 billion towards our short-term investments. We've paid interest and paid our maturing debt of about 887 million, which then landed us with a 2.6 billion cash after all these activities. And they must indicate that this exclude our short-term investment. So if you take our short-term investment and then we add it and load it to the 2.6, we are sitting at about just over 5.5 billion of cash. And you don't often find this in companies of our size. The next picture just gives us an overview of how our gearing has performed over the years. Started at 2.23% in 2021. That improved to 24%, 2023. In the 2 years ago, we had reported a 17%. And in the current year that we are reporting an 8% improvement. Our debt maturity profile, we have 2 instruments that are maturing in the next couple of years, in 2028, 29, which is an inflation-linked bond. We also have a preference share that is also maturing in 2030, 31. And the inflation-linked bond is about 2.5 billion, and while the preference share instrument is about 3.4 billion. We do have refinancing strategies in place, and we'll be going out to the market to attend to these maturities that will take place in the next couple of years. In terms of our key credit matrix, this is what we measure in relation to our performance. Our net debt to capital, it's below 65%, it's currently at 8% as indicated. And our target, our threshold is 65%, so there's, and again, enough headroom there. We're currently reporting in the current financial year an 8%. Net debt to EBITDA ratio, currently at a multiple of, we are below the multiple of 4, which is a target, currently at 0.6. Same with the DSCR ratio, currently at a 5.5, way above the 1.5 multiple. So what this means is we are actually effectively managing the cash flows of the entity. I must indicate as well that we had one loan covenant, which we have not been in breach, and quite happy that even when we look at next 12 months, we do not anticipate to breach any loan covenants. In fact, there's only one that matures early next year, and will be free from any covenants going forward. And really, again, this gives us a better runway for us to then engage banks, because there are no restrictions currently with regards to our debt. Our ordinary dividends, as indicated, and preference share dividends last year, having paid at 768 million, and I did indicate that this has increased, especially for the ordinary shares. The board has declared 113 million of dividends in the current year compared to the 47 million in the previous year, while our preference shares have reduced to 198 million of dividends in the current year. Over the period, we have paid almost about 5 billion of dividends to our shareholders. And this is what you don't often find with SOEs. We are injecting back to the fiscus of the company, of the country, and we're quite pleased with our continued injection to the fiscus of the country. In the next 12 months, we anticipate to remain quite liquid, having opened the year with a 5.4 billion of cash. We anticipate that we will generate receipts of about 8.9 billion, and then we'll end the year, well, not the year, but in 12 months' time, we will be sitting at about 3.8 billion of cash. And again, this is really a reflection of a company that is liquid, a company that is financially healthy. In closing, ladies and gentlemen, just to recap that our revenue has grown by 13%, underpinned by the growth in traffic. Our non-aeronautical revenue has also grown, which speaks to revenue diversification and really speaks to also resilient financial performance by ACSA. Our EBITDA of 2.9 billion, which translates to a 37% margin, EBITDA margin, while our profit grew to a 1.1 billion from the 472 million in the previous year. CapEx has improved to 861 in the current year. It really demonstrates a commitment by ACSA to reinvest rather, to the operations of the entity, infrastructure and capacity building. Our asset base has improved, while our liquidity buffer has also improved in the current year. Dividends have been declared to our shareholders, and we will continue to declare these dividends to our stakeholders. Repayment of the AFD loan in 2026, which will then eliminate the covenant that we currently have with our financial stakeholder. And what this means, ladies and gentlemen, is ACSA continues to really have a healthy financial performance, a strong balance sheet, healthy cash flows. And we're quite happy and pleased with our results, albeit the challenges that we faced in the current year operationally, traffic not being banked as anticipated. But what we've done as an entity is to manage costs quite effectively so that we still remain as profitable as indicated. Our capital infrastructure and spend in the current year did improve last year, 568 million, the current year and 861 million. And this really speaks to going back and reinvesting to all the infrastructure that are key to the company. IT, capital infrastructure, operations. If you look at the picture below, it shows that our biggest investment is refurbishment and rehabilitation. And it really speaks to giving back to our customers, improving the quality of our airports, so that really when you step into our airports, you recognize the investments that we've made. And this infrastructure that we are investing, colleagues, really is to attempt to really wake up the sleeping giant that is ACSA, so that we take our own rightful place, not only in the continent, but also globally, because we really are a force to be reckoned with as this entity. I will close there and hand over to my CE. Thank you.
Thank you very much, CFO. Another round of applause, please. We are besides ourselves with joy. We are exhilarated. We are so grateful to every single member of staff at ACSA because they have truly contributed towards the achievement of this. So these results really are results that come from the dedication of our people, from the collaboration with our stakeholders, and more importantly, with just the attitude that our people have of always, always being of service. We've had challenges, as we indicated, and as clearly as we have shown, we have learned our lessons. We have understood what declining infrastructure starts to look like in the final years if a CAPEX program does not get implemented speedily. We have understood what operational disruptions mean to the thousands of passengers that have been upset because they've missed their connecting flight and they've not been able to get to their destinations on time. We regret every minute of it. But we stand on the shoulders of a company that clearly has shown resilience and can project forward, as we will indicate here in the outlook. The CAPEX allocation outlook, therefore, shows a 3 times allocation of 2.3 billion, as opposed to the 727 million we indicated. We did say we exceeded that target of 272 in the previous financial year. A clear demonstration that our systems, our processes, our capabilities, our people are well positioned for a higher CAPEX expenditure at a higher trajectory. And that 2.3 billion with 151 refurbishment projects, with 220 as a total, puts us in a very good position to roll out a platform, to roll out a new airport environment that will be amongst the best in the world. So you'll see a year of consolidation, of resilience, of implementing these refurbishment projects. You'll see us focusing on efficiency, on technology, on compliance. We are a highly regulated entity. We are regulated from a safety perspective, a security perspective. We're regulated in terms of the types of infrastructure we must have. We're regulated in our interface with the airlines, our interface with ground handlers, our interface with jet fuel suppliers. Sometimes we have issues that are beyond our control. And I must say, referring to jet fuel, the issue of energy security in South Africa remains a challenge for the country. The context is that it poses a specific challenge on us as Airports Company South Africa. And so you will see our commitment is simply about doing as much as we can as Airports Company to rehabilitate the jet fuel infrastructure. But there's another challenge that we can't solve, and that is the fact that South Africa now has 1 refinery instead of 2. The fact, and the Satrev refinery was closed in Durban. The second is that South Africa is now extremely dependent on imports, on fuel, more than it ever has been in the past. So when there's service disruptions around that import chain, it impacts on us. We normally say the only sin we have as Airports Company South Africa is that we're the biggest consumer at 3.5 million liters a day. That's our sin. 3.5 per day. That's what we consume. And if the market cannot supply us 3.5 million liters a day, that is what you see as disruption. But in essence, we work together with all the stakeholders at every level to ensure that South Africa will have and continue to have enough fuel that is secure as well. So what you do see here, as acknowledgement of the point I made earlier, is we've taken a significant proportion of our CAPEX and we've ensured that we're focusing on refurbishment and rehabilitation. If you look at that bottom bar, that is a clear demonstration that we're not even ambitious to look at capacity yet, because the platforms we have must be brought back to international standards, and that allocation for rehabilitation and refurbishment is the largest of the 21.7 billion we're allocating. Capacity is very limited, but most of you are passengers. You know this story. When you go to Cape Town on a Friday afternoon, not so pleasant. The domestic terminal at departures has become quite small. And that becomes an immediate priority for us to expand the terminal. Those who travel to King Palo will know, being at King Palo Airport on a Sunday when most of the commuters are coming back, not pleasant. Those who travel to Chief David Stearman will know that the terminal is in need of expansion. Those who are at George Airport will also tell you, we've got an unexpected surge of traffic in George, and the terminal is not even big enough. So all those terminal expansions are literally what you're going to see being implemented under that capacity and what we've allocated. And then we have key capital projects up to 2032, and those include OR Tambo. We are going to be starting the implementation of the midfield cargo terminal, and I must indicate right now that the team, and the team leader was here just now, the team has already started what are called enablement works, which really will take us forward in the fast implementation of that cargo terminal. We currently have a cargo capacity of about 450,000 tons. This new terminal building will take us up with 1.2 billion tons, metric tons, and that basically gives you about 1.5 million metric tons in the first phase of the cargo terminal, and then we'll be developing more, which takes us to the 2.3 that you saw earlier. The other exciting, and midfield means between the two runways, and that means that's exactly where it's going to be developed. And that brings bigger efficiencies, and that means it operating literally at full throttle. After the cargo midfield, there's another project which is called Midfield Passenger Terminal Complex at OR Tambo, which will also go to midfield, and a brand new terminal. Those of you who travel extensively will know that when you have a midfield terminal, you normally take a train or something to go to the other side. Yeah, we'll have that exciting thing with a train link that takes you to midfield in the passenger terminal. International busing gates, for those who travel to, trying to make this as practical so you can see it and live it. International busing gates are when you're traveling to the African continent and the small regions, the flights to Maputo, Botswana, etc. That's getting a total refurbishment, that whole area. And so will what we call the sea gates, dark, dingy sea gates, for those on the domestic side, are also getting a brand new feel on that side of the airport. We're doing extension to domestic terminal in Cape Town, lounges, arrival terminal, and the very important project of the realignment of the Cape Town runway. That realignment gives us greater capacity, greater efficiencies in Cape Town, and we can land more aircrafts and cope with the current constraints that we have. The various infrastructure and refurbishments then, 1,158 airport infrastructure and maintenance projects, 78 corporate projects, that means related to the corporate office, energy demand, and we spoke to you about really going, one day we wish we could truly become off-grid. And we felt more when there was load shedding than we do now. So that's a very important project for us to become totally off-grid in the energy demand, but also with the solar projects and the various gas-to-power tri-generation plant that we'll be implementing. So what does the outlook for the next 5 years look like? In essence, we'll be implementing our Innovate, Grow, and Sustain strategy. We'll be pushing high technology, updating the systems, and utilizing best-of-class technologies so that our airports qualify as smart, but also that they are future-proofed and that the business is operating at its efficiency. We're going to roll out the balance of the 21.7 billion of the permission, just basically to ensure we improve passenger experience. We're going to strengthen our controls, governance, and supply chain. Very important issue here at ACSA. When you have a 21.7 billion, yeah, the problems begin. Because everybody wants some. I want some. So-and-so wants some. And therefore, our procurement processes have to be corruption-proof, unethical behavior-proof, and interference-proof. It's really something A company like ours has to ensure we're able to achieve. Otherwise, we'll look back one day and the 21.7 billion would not have hit the ground. It would have leaked to some unfortunate places, and we'll have commissions of inquiry that suggest that we must investigate who did what. But the system that we basically are putting forward in the procurement environment is to actually protect that investment and make sure value is delivered for shareholders and that every cent ends up exactly where it's meant to end up. And there's no leakages, there's no corruption, there's minimum interference, and South Africans get what they deserve. Because in essence, colleagues, all of this is funded by passengers in their tariffs, is funded by the fees we charge, is funded by you. And therefore, our levels of accountability for what we invest, how we manage your money, is actually a top priority for the company. We'll also ensure we continue with our international relations and collaborations. We're a member of BRICS. We operate in that environment. We keep seeking opportunities for airports company to provide expertise and support to other airports outside of our own network. But importantly as well, in our focus on innovation, would be establishing an continental innovation hub as we lead in the area of innovation. I think we mentioned earlier that innovation is now one of our pillars, but what's important about that pillar is we're partnering with CSIR and the Innovation Hub, best in class in South Africa, research institutions that know what innovation are about, in order to make ACSA really the platform where the country quantum leaps to the next generation. We also manage our debt proactively, maintain liquidity, and also adapt macroeconomic as well as industry dynamics. In conclusion, therefore, we remain aligned, agile, ascending, and to continue to really deliver sustained shareholder value. We believe stakeholder value as well, because our primary responsibilities are to enable our stakeholders to perform at their best. We support national economic programs, and we position our airports as globally competitive and socially responsible. We also would look at the strong performance, which is driven by a very disciplined strategy execution, robust governance, which has given us the 13% year-on-year increase, reaching 7.9 billion revenue. We were at 7.0 the previous year. The declaration of a dividend, we think is a good thing to do. We've declared the 310, but what it actually shows is the confidence of this company to be able to deliver shareholder value and ensure future funding. So the questions may already be ringing in people's heads about the slight difference in the preferential share dividend that we've paid this year, which is less than last year. And that's simply because we didn't pay in the first few years of COVID, and we had a front-loaded dividend. So let there not be a conclusion that we're giving less to the preference share. The more important one is the ordinary share dividend that has increased from 47 to 113. That's the real measure of value creation for shareholders. As we go through the reporting cycle, therefore, the strategic procurement would need to support SMMEs, women-led companies, youth-led companies, and creating the jobs that are necessary. Our strategy will focus on delivering value, operational efficiency, revenue expansion, financial resilience, and just long-term growth. We'll continue to strengthen our airport value chain and enhance state capability in advancing inclusive growth and regional socio-economic development. The role of ACSA in this economy, we believe, is still to be seen. The role of aviation, air cargo, in trade facilitation and promotion of tourism is the foundation we're building in order to have a meaningful contribution to sustained economic growth, not only for the company, but for the country and for our people. We thank you for your attention. We'll take questions.
CEO and CFO, thank you again for the financials. It was anticipated that these would be solid results because we know you are a formidable team. As you said, CFO, you're a force to be reckoned with, and your work is not done as yet because the rest of the continent depends on you so that we can replicate the standard of excellence that we have. CE, you anticipated a lot of the questions that our audience is asking both online, on social media, and on Teams. If I may please request the colleagues in various parts of the country. In Kimberley, we saw you. King Shaka, we saw you as well. Add your questions to the tab that says Q&A, and not in the chat box, because those disappear or they get lost in transit. So please put your questions in the Q&A section. I'm just going to shoot straight ahead. Cyril Moodley from the Airlines Association of Southern Africa highlights the disruptions of the fuel or jet fuel, as you touched on, CE, and the projects to bypass the fuel systems and backup generators. What is being done about that? We'll take questions in 5 batches. The other one is from Ziyad Ziggy Mohammed, who says, when will construction begin at the OR Tambo cargo terminal and including the midfield passenger terminal? Another one is, how is ACSA preparing for alternative aviation energy sources, such as biofuels and hydrogen? Are you good? Before I forget, there is one on opportunities for small, medium enterprises as service providers in all sectors, or rather all the value chain. Thank you.
Thank you. Would you like me to proceed?
Yes, please.
Oh, thank you very much. And thank you for the questions to those that have posted the questions. We really appreciate it. I think let me just give a more detailed account in relation to jet fuel, because there is an interest in us articulating very clearly what we've done. In my presentation, I just referred to it very in summary form. So the first thing that we had to do in the jet fuel space is to create a bypass. And that basically is a new system that would have bypassed the particular valve that was problematic at the time the incident occurred. So that was the first exercise. We invested money, we did the bypass, it was implemented, it was successful. The second part is that we had to do what's called an 18-inch line, which is a replacement of a second jet fuel line. And we just thought, to be extra cautious, let's also replace the 20-inch line so that we have redundancy and basically minimize the risk of any failure. So between the bypass and the 18-inch and the 20-inch, if there's a system failure on one, we click to the other. So at the end of implementation of this, we would have ensured that we've created sufficient redundancy in the system and mitigated the risk of ever having an incident of the jet fuel or the nature of the jet fuel that we had. The additional issue, because we are so careful at ACSA, once bitten, twice shy, is we re-looked at our fuel storage capacity. And we now have a proposal for the expansion of the fuel tanks. That basically means the airport can then cater for more fuel, and that minimizes the risk in instances where we run short from the external suppliers whose own risks we cannot control. So let me give an example. We said we normally operate on the base. The total capacity in the airport is possibly right now around 8 days of supply, right? So we have a system, and in the aviation industry it's understood, that we must never get to 3.5 days of supply. That's almost equivalent to that 3.5 I was saying earlier. So here's the danger. When we get to 5 days of supply, we normally ring the alarm bells and tell all of you, oops, we look like there is a challenge in supply because we're not getting more supplies coming in. And what we've done now is we've increased that to about 10 from that, so that that additional capacity allows us to be secure for about 10 days without worrying altogether. And that is what we've done on our side. What we've also looked at is a connection that will come via Jameson Park, which is Transnet owned, that will provide an additional connection that creates for greater efficiency to Natrev, which is the Sasol plant, that will then give us additional capability as well. So with that plan in place, we surely have done the best we can to minimize any future risks. I might hasten to add, though, that the risks in the fuel industry are literally totally beyond our control, some of them. This week, we got a notification from Total. They had declared a force majeure. I happened to be in Mozambique at the time, and I was told the force majeure has actually been declared in Mozambique, where Total is basically based. So there are things that happen in the region, like a company declaring a force majeure, that we really have tried to mitigate against, but in essence, there's very little we can do. But from a passenger and an airline perspective, we assure everyone, with the bypass, with the 18-inch, with the 20-inch, with the fuel storage increase, very, very simply, we've minimized any chance of disruptive occurrences. The other, just to finalize, is also getting into predictive maintenance on the systems, and that's what we're working with people like CSIR. So we can tell inside the infrastructure, you can imagine jet fuel is right underneath, but we must be able to say, that pipe looks like I'm trying to answer even questions that haven't been asked about it, so that there's absolute clarity, that we know what we're doing in jet fuel and we've provided the solutions that we need. On the issue of construction on cargo midfield, I indicated in my input that we have now started and approved for the enablement works. And the enablement works is simply getting the land, removing the taxiway, reallocating the pipes so that you start. So what it means is that the cargo midfield is now starting on the roll because the enablement works are now starting. So I hope that answers that question. The passenger terminal will follow the cargo terminal. They don't happen at the same time. So cargo will happen now, and around 28, 29, we're clicking into the passenger one. The rule at ACSA is we don't trigger CAPEX unless it meets the 7-year rule. That means 7-year projections show that now you're going to need this capacity in 7 years, and therefore you start it then. It's just a formula for our economic regulation. You can't build white elephants. You build when you know you're 7 years in advance for needing something. Alternative fuels, we're very, very excited by the potential that this is going to bring. We've started with 2 programs. One is we're looking at SAF, as in Sustainable Aviation Fuel, and are linking up to the global network through ACI Africa and ACI World, and we're not so well endowed with those things. But SAF will happen. The one we're more excited about is 2 years ago, we started a partnership with the Department of Science and Innovation, and that Department of Science and Innovation has made us the pilot project for hydrogen. There's a hydrogen corridor. It starts at Polokwane Airport, passes over Tambo, and goes to King Shaka International. We've presented ourselves as ACSA. We are a pilot. We manage jet fuel. We know how to manage fuel safely. We're regulated. We propose you make us the pilot site for hydrogen, and therefore we have been designated the pilot for hydrogen in those 3 airports along the corridor, and that means we'll be starting with hydrogen production. The first thing we know from the aircraft manufacturers is they have confirmed they will not be a hydrogen hybrid aircraft before 2035. Between now and 2035, we are going for the operating systems to be transferred to hydrogen. Baggage system, tags, buses, all sorts of operating systems on the airport platform can start being transferred to hydrogen before we get to 2035. Very exciting program. It makes us best in class. We also talk about this globally because I think the rest of the world is not quite well endowed around the hydrogen issue. Finally, SMMEs. The 21.7 billion is a program that's structured for CAPEX. Importantly, our program for transformation aims to empower SMMEs and make sure they are the primary beneficiaries. We set targets across sectors for SMME achievement, and we monitor very closely. So in the construction sector, we monitor the technology, in the security environment, in all our delivery environments, we manage how much SMMEs are benefiting and whether we're meeting our transformation programs, our transformation targets in those areas. We also then have support in the company that also includes supporting SMMEs in various ways. We provide enterprise development, we provide supplier development management, et cetera, and a whole range of programs that are intended to give SMMEs the opportunity also to bid and participate in this. We are particularly at this point concerned about the limited participation of youth, and that then becomes our focus in the next year. So we can ensure it's really young people, and we're quite concerned, in fact, that the young people are not even showing up in the technology area. We would think they would, and they're really not. The young people-owned companies are not showing up in our IT space, where there is a lot of opportunity and there will be a lot of CAPEX spent in the IT space, including in the operations space. But we'll go out there, look for them, find them. Last year we were obsessed about women, and we think we're okay now with women. We've had a surge of women participation in certain of the areas of our business. Thank you.
Thank you, CE, for very comprehensive and detailed. And as you're saying, these are things that you ponder on a daily, and of course have to have the confidence in the stakeholders that this is a well-run network, and any concerns that they have are addressed adequately. That question was from Lisa Rolani, or was it Khokhani? Hey, being South African, because sometimes you never know. I hope I didn't butcher your name, Lisa, but thank you for that. Let's move on now to George Ahlanga, who's an employee, wants to know, what does this great performance mean for employees? And I think before we do that, may I open to the floor? I was going to say, you get a car, you get a car, you get a car, you, everybody get a car. Before we go to the employees, please can I open the floor to members of the media? Any questions that you may have, and you may need to go back to the office and file. I understand the pressures. So please identify name, surname, designation, and give us your question. We've got roving mics, just by an indication of hands where you are, so our ushers can find you. Any questions from the members of the media and the audience that is present, the live audience that is present here today? If there are no questions on the floor or while you're making notes, let's go to George Hlanga. And Mtutuzi Mazala says, what's the normalized preferred shares allocation for the respective years, COVID years? And this would show a clear trajectory on the financial year 2025. This is very gibberish to me, CFO. It sounds like French, so maybe you can take that one in what the normalized preferential share allocation is for the year. Do you want to take George as well?
Well, you've taken the thunder.
Oh, I'm sorry.
Well, look, what it really means for employees is that this year we have a bonus year. Staff. The second bonus year running, and we really believe ACSA is built on the strength of our people, and it is really the hard work of our people, and we reward them generously. The formula for determining this is known to all staff. It's not a secret. And I'm sure all of you can now take out your calculators. You saw the numbers, and you can try and work out. But we are a reasonable company, we're a generous company. We understand that, in fact, we stand proudly on your shoulders, and we are just representatives of all your hard work. And I am certain, with the approvals being finalized, with the announcements of the results, that all staff would be awarded or recognized for their effort in this great financial year that we've ended of 24-25. I'm certain of that. But what also means, colleagues, is that we need to remain committed. We need to remain on the path we have designed in our strategy. We need to remain committed to continuing with the resilience that the company has showed, providing shareholder value, but more importantly, we need to remain committed to doing this clean, together. Clean audit must be the outcome of it, and that doesn't come from us, the leadership. It comes from all of us combined in the way that we'll conduct this business. There's nothing as painful as achieving what we've had, from dividends to profits, etc. Then you find that the way in which we have done it is actually leaves a lot to be desired. So that's our next challenge. So we'd like to reward staff, but we'd also like to challenge you for a year ahead that actually helps us to achieve good governance, excellent execution, and real continued value for shareholders.
I would have thought there'd be a round of applause for the bonus. I suppose it's just one of those things. Thank you so much, CEO. CFO?
Yeah, so if I may just respond to the normalized preference share. So I think what distorts the number in the previous year is what CE mentioned earlier, that we did not pay preference shares dividends since COVID. And we had agreed then with the holder of the preference share that would accrue. And as soon as then we become profitable as an entity, we would then pay the preference share. And this really also speaks to the principle of paying bonuses once we make profits as an entity. So last year, it was our first year that we declared a profit, and as a result, it was our first year that we then honored the preference share dividends that we had accrued but not paid. Now, in the current year, the 198 preference share, and again, because we've caught up on the accrued preference share last year, what we've paid in the current year just relates to what has been accrued only in the last 12 months. So what you will see going forward is really just the 198 plus minus preference share that we'll be paying going forward, because then there's no accrued preference share that we are bringing from the previous year, because we've already settled that. But what is more interesting, I think, in regards to dividends, is what we pay the ordinary share dividends, which is usually around the 10% of our EBITDA, and that's what we really would like to commit going forward. As indicated from the graph that I presented, that ACSA is one of the few SOEs that have always paid ordinary share dividends back to the shareholder, and we really want to commit to that and create value for our shareholders. It so happens that the preference share was also issued by the shareholder, so it's a double benefit for our shareholder to get both the preference share dividend and an ordinary share dividend.
And the Mail and Guardian echoes that sentiment on Twitter or X, and it says that ACSA is exemplary of a state-owned entity that is both financially, operationally well managed. But here's the question then: how well are you insulated for turbulence ahead, particularly when it comes to market conditions that are outside of your control?
If you look at COVID, which is a good example, during COVID, we were then hit by an unexpected pandemic. But what we did as an entity was to quickly implement intervention strategies. One, to cut down on cost, And that actually allowed us to float as an entity. Most entities really struggled. In fact, we did not even have business rescue from our shareholders during the COVID years. You would expect that an entity like ACSA that had no traffic at all would then be one that qualifies or that would then go for business rescue. But because of the interventions that we took as an entity, to say, hang on a second, let's cut down costs because there's no top line until such time that we are then back to on our feet and we are sustainable. Hence, we are now starting to capacitate. And those are the interventions that as an entity like ACSA, we then implement immediately once we are then hit by those turbulences. There are certain environments or factors that are out of our control, as indicated by the CE, but those that are certainly in our control, we are quick to respond to.
All right. I hope that satisfies the person who posed that question. There's one CE that says, or from Vuyom T, says, well done on the SME program. I am 35 years old and I'm working on one of the infrastructure projects. As a result of the target set by ACSA, truly a game changer for our business. Thank you, CE. All right, let's go back to the media. I believe we have my colleagues in the media who are ready with questions. Or, there we go. Please identify yourself and your publication. Thank you.
Hi, good morning. This is Hein Schenk from Netwerk 24. One of the themes, Mpumi, of your presentation has been, it's obviously been a humbling year in terms of operational challenges, but like you mentioned, for example, with the jet fuel, you guys have addressed it and stuff. I just wanted clarity. One of the other operational issues that you guys experienced was specifically at OR Tambo with the domestic terminal and its security services. Has that dispute been resolved or has it been mitigated? Just some update on how that's been going. Thanks.
Can I take that one?
All right, the second question, Steve, then we can wrap it up. Is there anybody else? Oh, there we go. The lady there in second last row at the back.
Hi, my name is Solofelo. I'm from Future Families.
We can't hear you. Please speak
stand
louder.
up? Can you just stand up?
Yeah,
This
there we
project's
go.
better.
Hi, my name is Solofelo. I'm from Future Family. My question is that what were the major challenges faced by ACSA during the reporting period and how did the company address them?
What?
So what are the challenges? Sorry, Tsulu, you speak so quickly. We hardly heard what you said. Yeah.
What were the major challenges faced by ACSA during the reporting period and how did the company address them?
All right, thank you. I think the challenges during the reporting period.
I don't know.
And the other one had to do with the labor dispute. Do you want to take that, see?
All right. Can I take those?
Yes, please.
Can I proceed now? Okay. Thanks. Thank you very much for the question to the gentleman at the back around the security insourcing program that faced challenges of transition. And that was basically, excuse me, a decision that would been taken to implement what is called a security zone strategy, which determines that in certain parts of the ACSA business, given that it's a national key point, you can't employ unverifiable people, if we may, unvetted, unverifiable people. It then led to a designation of certain areas to only be ACSA employees. The transition then from privately owned security company employees to ACSA security is then what the glitch was about, given the CAA requirements for certification for screeners, which is a standard. We also had a challenge with the security companies themselves not giving up the information related to employees who had now found a job in the insourcing element. And that transition was untidy, to say the least. We have acted on it. We have even taken consequence management on it. And we have corrected those arrangements to ensure, one, that we get to full 100% compliance of the screeners in every area, in the airports that were affected, because it wasn't every airport. In certain airports it was really smooth, it was OR Tambo, and to ensure that the unqualified screeners are basically not deployed in the areas where the certification is required. But car park, somewhere else where screening certification is not required, they can be used. So there was quite a lot of movement of people around to ensure full compliance with CAA. And CAA has been, in addition to that, there was training by our training academy to ensure that those people can be brought up to speed, or those who were in the process of doing so were completed. And therefore, CAA periodically has done, I think they've come back once at least, to reassess the situation and then indicate their satisfaction with it. So that problem, again, is something that we didn't anticipate, but we've managed it through. And that will happen, will be settled, and it will probably never happen again, because the transition from the old arrangements to the new model, recognizing sensitive national key point areas, is done, and we'll never do it again. I think the issue related to the impact on passengers is something we regret, and more importantly, what we're able to say to passengers is they must just work with us until we resolve that, and it was resolved in the end. But it was a difficult transition, and something that may have been planned better, as we say, and that planning better would have probably required, if you just ask now that they say foresight is now is 2020, now we're wiser after the event, would have required a transition period of about 6 months where you double that capacity and don't try and transition it at once. And that would have actually worked out better as a plan, but that's not what was on the table. So yes, largely that issue has been dealt with. The next question about challenges.
The challenges in the review period.
I would have hoped that throughout our presentation we've been able to deal with them, but let me just assist as a top priority. What we did indicate is that we've started to face challenges on our infrastructure, which would show a deteriorating infrastructure that required preventative maintenance and the ability to targeted investments in that infrastructure to prevent incidences such as jet fuel or anything of the sort happening. So jet fuel was our major one. It happened in this financial year in December. We had another challenge which is not related to us, but related to BMA, when the transition from the one system of BMA to the new biometric system also didn't happen as smoothly as they required, and that also happened in December. But we assisted BMA, we brought everything back on operations. In fact, they went back to the old system and went back to the drawing board about the new one. They are still there, they're going to come back much later with a biometric one that did work. The other challenge, I think, was just this mismatch between where we are running projects and where infrastructure is showing weaknesses. And that mismatch, again, the lesson we've learned, we should have much better asset management, predictive maintenance programs that just dictate what projects we do first, rather than doing projects because they are scheduled. Do the ones that are going to impact negatively or going to result in disruptions. As we roll out, we've had an engagement here in this very room with the airlines. We're absolutely clear about the airlines' priorities so that we make that our first priority in relation to passenger-facing, airline-facing interventions on infrastructure first, before prioritizing other long-term, maybe commercial projects on the platform. And that's, I think, the biggest lesson that we've learned. But we look forward to a great year ahead, innovation, technology, and the implementation of our strategy that takes us forward. So we've got more to look forward to than to look back as just lessons learned that have taught us how to perfect the system and really produce the financial results that you see today. Thank you.
So there's your article written already. You just need it approved by your news editor, as the CEO had responded, as she does in full detail. Any other questions from social media? Please indicate, and also from the audience. We don't want to keep you longer than necessary. And at the rate that we're going CE and CFO, it looks like we've had tailwinds, because this aircraft is about to land ahead of schedule, almost an hour.
Wow.
So if there are no other questions, I'd like to call on, as we thank a CE and CFO for their presentations today and sharing the good news and where the company is seeing itself going, we'd like to give you a round of applause.
Thank you.
And thank you very much for your presentation. Thank you so much, CEO. After you.
I think it would be amiss if we didn't thank the teams that have led this. I really think it would be amiss, and I hope I'm not taking the thunder away from, but I just think at our level, I would like the group executives who are here with us to just stand up. I'm sure you'll be thanked later in the proper vote of thanks. But from us, myself and the CFO, we don't work alone. This is a wonderful team that helps us to execute all of this, and I'd like them to stand.
Thank you, sir. Thank you so much, sir. Appreciate it. So Laurie Liss is the Group Executive for Corporate Services, and she will be doing the vote of thanks. And again, a reminder to please utilize this exquisite venue that is state-of-the-art for your events going forward. She's part of the team who will also put together the event. So I'd like to thank you as you welcome her to the podium. That is Laurie Liss. Do you want the podium?
Yeah, no, just the mic. Certainly, under the leadership of our CEO, Mpumi Mpofu, none of this would have been possible. So today, as we come together to celebrate this remarkable milestone of achieving a 1.1 billion net profit, I want us all to pause for a moment and reflect on what truly lies behind the numbers. CEO and others, you have reflected on that. These impressive figures are not just lines on a financial report or a point of pride on a balance sheet. So behind every single rand of that 1.1 billion is the daily dedication, the passion, and the hard work of each and every individual who makes our airports what they are. Behind those numbers are the 1.1 billion parts, the logistical processes that continue to move all the time, 24/7, and the tireless hands that ensure passengers fly seamlessly to their destinations. And behind them are the careful eyes sorting and moving your baggage, your luggage, the welcoming smiles from our customer service teams, the availability of a trolley, a simple trolley, when they are needed most, and the steadfast presence of security personnel who keep us all safe and secure. Each role, no matter how big or small it may seem, is vital in the aviation management value chain. And without this collective effort, there would be no story to tell, no milestone to celebrate today. So this profit is more than just a number. It is a reflection of our people's unwavering commitment, our spirit of teamwork, and our resilience in the face of challenges. And together, we are not merely moving forward. We're not merely moving planes. We are moving a nation forward. So as we celebrate this achievement, let us remember that behind every number is a person, a story, and a purpose. At that point, could I have the team, the whole team, who put this together, at least come to the front so we can really thank them. And from the bottom of our hearts at ACSA, thank you for your dedication, your hard work, and your belief in our shared mission. On behalf of Airports Company South Africa, let me extend our deepest gratitude to you, our distinguished guests, representatives from the Department of Transport, government officials, shareholders, valued industry partners, our board of directors, executives of ACSA, and members of the media for honoring us with your presence today. Your continued partnership, your guidance, and your support remain central to ACSA's success story, and together we will continue to soar even higher. The team, where are you? They're scared, they don't want to come up. Right, thank you, there they are. Thank you very much. Please enjoy, and there's lunch being served.
Thank you so much, Laurie, the Group Executive for Corporate Services. There is also 2 videos that we'd like for you to pay attention to, and these speak to the milestones, the investment that has been made, and the returns on those investments. So I'll just ask the technical crew to please play that video for us, which will be followed by the summary of the financial results as presented today. And then I will come back and then announce the lunch break as we conclude. Thank you. For Boeing 747, but there's many other examples of the excellent work that has been done throughout the reporting period and beyond. So I'd like to thank you all. You've been a wonderful audience. Thank you for the opportunity, CE and your team, and everybody else. Thank you as well for participating and engaging with us. Lunch is served. I'm not going to stand between you and your hunger and sustainability and your enjoyment. So please go out, enjoy, and thank you again for your collaboration and partnership. Thank you.